Hello everybody, good morning, afternoon, evening, depending on where you are in the world. My name is Steve Eakins, and I'll be your host today for this exciting webinar, or as exciting as we can make it, around tax and US expats community. So this is all around managing tax and investments in obviously the changing global landscape that we're all dealing with at the moment, from elections, obviously in the US, which is only 22 days away when we're doing this, as well as all the political and economical events with debt changing and interest rates changing. But I'm joined today by two experts in their field, both Randall and Linda, which I'm going to give a moment to introduce themselves shortly, to say hello. Then for the rest of the day, the rest of the session, we'll be going through the questions that have been kindly submitted by everybody that's registered for this event. We've compiled a few FAQs in essence, because lots of people have been asking similar questions, so we're going to go through them initially, and then we'll go through the live questions that have been submitted again at time of registration, or indeed live now. So those that are in the audience and joining us live, there is the option to submit questions, and we'll prioritize them and go through them as quickly as we can. But firstly, over to Randall to introduce himself. Hello, Randall, welcome.
Hi there, Steve. Yeah, thanks a lot. Yeah, my name's Randall. I'm one of the senior advisors at SJB Global, also SJB US. What we do is we specialise in expatriates across countries across the world with all of their cross-border finances. So with SJB US, we predominantly first started working with UK expats for many years, and all of the issues that they had both over in the US and from their UK standpoint. But then over the years have many inquiries from US expats as well, moving across to the EU to understand how their US based assets were going to be treated. So I'm an EU, UK and US qualified advisor, and we hold licensed jurisdictions in all of those countries. So it's exactly what we do, specialise in helping navigate all of the different minefields that these people have when moving between different countries.
Welcome, thank you. We're looking forward to this conversation. Every time we speak, I learn something new, to be honest, so this is going to be good. And Linda, welcome to you.
Thank you for having me. My name is Linda Mabelis. I work with Americas Overseas. I'm the CEO. We have a team of 15 people and we speak 5 until 8 languages. We help people, Americans, living abroad with tax filing and all the questions around it. To be perfectly clear, I'm not a CPA, I'm not an EA, I'm not a tax advisor. Americas Overseas is informing and give free information about tax filing and can help you connect with the right tax advisor for your needs. That can be based on price, based on complexity, based on where you live or what you're going to do. And I'm here to give more information about US tax filing and all the burden where Americans abroad do live with living abroad. Thank you for having me.
And for those that don't know, I haven't put 2 and 2 together, as well as being the DJ or host for today, I'm also part of the expert panel as well, answering the questions that have been submitted. I work for a firm called Lumon Pay, and we're an international payment specialist. So we've been helping people move money internationally for coming up to 25 years. So as you can see, between the 3 of us, you've got some information around US tax and how to coordinate that and start answering and wondering around how to plan for that, wealth expectations for that as well. But as a lot of people in this community here will be expats and therefore moving money around the world, we come in to help and service that as well. So if you're engaging with any of the 3 of us, you'll normally end up engaging with all 3 of us, which is why we're all here today to answer the questions that you popped in. So first things first, we're going to go to Randall for a few FAQ questions that have been submitted. Again, as a reminder, feel free to submit questions as we go live. We want this to be as useful and as valuable for everybody that's here. So please do keep the questions coming and we'll go through them as well as we can. First one for you, please, Randall. So what investment opportunities are available to me as a US expat living in Europe, and are there any restrictions?
Yeah, really good question, one that comes to us a lot. So there is, for people based in the EU, it can be really tricky investing. There's quite a few restrictions in place. So first off, the investment that they hold and whether these are foreign mutual funds and ETFs, for example, based in the EU, these shouldn't or can't be invested for US connected people, because they can be classified as something called a PFIC. So that can lead to really severe tax consequences, where you can be taxed at a much higher rate and also additional tax on the interest. So there's big restrictions first off on that place. Secondly is the institutions that will actually first off even allow you to open an account in the first place, and whether they would even allow you to do so. So with FATCA restrictions as well, a lot of institutes across the EU won't even allow US connected people to invest. And therefore you have to have a much more specialized brokerage account or specialized solution in place to allow you to continue investing. You can continue to invest into US brokerage accounts, but again, that would depend on your country of residence, and also in a lot of cases whether you still hold a residential address in the US. Also, depending on your income and how that's received and where that comes from, you may still be able to pay into some of your US retirement accounts, but again, if that's not classed as income that's relevant from the US, then you may not be able to as well. So yeah, reviewing that situation, speaking with an advisor that has regulations and solutions across jurisdictions, will be able to help you find what would best actually fit your situation and see where you can invest and how.
It's one of those big wide open questions, isn't it, right? But we'll try and give as much value as we can without, yeah, everyone will have their personal circumstance that we need to go through with you on it, but hopefully that's useful. Next question for you, same with you, please. What should I do with my retirement accounts, such as my 401k and the IRA when I move from the US, obviously, even, yeah.
Great. So there's three main things that you can do with these different retirement accounts when you move. First one, simply leave the account where it is. Second, roll that over into an IRA if it's a 401k and it hasn't been rolled over already, or withdraw the funds completely. The third option there might not be the best, depending on the size and value actually of the account, because if you're going to withdraw the whole amount, it can lead to some really high tax consequences for doing so. And also, depending on your age, if you're taking that earlier than you're able to, then again there's additional taxation that could incur from doing so. So that's generally the option which would be the last resort and which you wouldn't want to consider doing. Now, you could leave the account where that is, and again, going back to the first question and touching on some of the points where I mentioned on there, that might depend on the country where you're resident and whether if you still hold any residency at all in the US as well. So a lot of 401k and IRA providers as well would actually force you to close down the account or to force you to transfer it to an alternative within a certain time period if you don't have any residency at all in the US and they find this out. And again, you're going to have to move to another US brokerage account, which actually allows you to become a client of theirs and in the country where you're resident as well. So there's obviously a more restricted list in these circumstances, but there are a lot of well-known providers that still do allow this. So reviewing that, seeing how you'll be impacted if you are moving, or if you haven't updated your accounts, the address on them, then you do so, before, knowing the implications and then speaking to an advisor to see what you can do. Now, rolling that over, the 401k as well to an IRA might actually be a good option for a lot of different reasons. The 401k from the old employer might have higher fees, less investment choices, and also when it comes to the beneficiaries receiving the money, it might actually be better for them in the future to have that in an IRA. So they're the three main, I'd say, areas that you'd have to consider when you are moving away from the US. And then obviously talking them through with an advisor based on your individual circumstances, finding a solution that best fits you to then get that advice. Now, on top of that, you may also have a US advisor already that looks after these. speaking with the US advisor whether he's still able to even continue providing advice as well when you move should be in the conversation prior to moving, because a lot of advisors in the US, that if they're solely US based, US regulated, will say that they're no longer actually able to provide that advice. So you're going to need an advisor that's regulated in both jurisdictions to actually to service you and look after you long term.
Well, that's a rather concise answer for quite a big question, that one, isn't it? But yeah. Next one, should I keep my financial accounts in the US or move them to my host country? That one came up a lot.
Yeah, again, that's a very broad question, and it depends on what accounts that someone does have, and again, how they're going to be treated when someone does move between countries. Now, with retirement accounts, as we just talked about, the 401k, IRAs, other retirement accounts as well, you're not going to be able to transfer these to another country or to another pension scheme to do so. It's just not possible to be able to transfer a pension in that way. But if you've got other additional brokerage accounts, then you're going to have to look at what type of accounts they are, what different holdings or what different investments that you've got underneath there. And you know, if you've got large capital gains tax liabilities already, and then you're going to sell out all of these and incur a large tax consequence of doing so in 1 year, might not be the best solution to do that. So again, as mentioned with the 401ks, IRAs, your brokerage accounts may not also enable you to keep open that account as well. So again, you're going to need to see whether that needs to be moved over to another brokerage account that allows you to enter based upon your residency status, what country that you're in as well, and then reviewing the underlying investments to see what should be done with these in the best way. Now, we work alongside a lot of money managers here in the US, so we can transfer investments over, which is called in specie, which means that it doesn't actually incur a tax liability for doing so, do a full X-ray review of the existing investments, and then understand different solutions and strategies that could be put into place. So one strategy that we use a lot for clients if they've got individual stocks or bond holdings, or as well, is tax harvesting. So, and tax harvesting is where the money managers will offset some of the capital gains by selling investments that were at a loss to then buy similar type investments as well to rebase and reset some of the capital gains liabilities in the portfolio. So working on a strategy for that can be really effective for doing so. But in terms of actually moving all of the money over into another country, again, you've got restrictions that come into place, as we've talked about from, you know, question one. You know, if you are going to move it, where are you going to move it to? Is it going to be effective for you from a tax liability first off? Secondly, from the actual investments that you're actually going to be able to use or utilize underneath that, what are you going to be able to invest into that's not going to incur you problems down the line? So reviewing those, and then also discussing what's available in your country that you could actually go into, is important to look at.
Yeah, I might have to apologise there, because maybe I made that question a bit too broad, didn't I, really? Moving from the US to anywhere in the world, what would be the impact? Yeah, so well done, a nice concise answer for a big question there. Next one was a bit more concise, perhaps. I've lived in Europe for the last 6 months, and my financial advisor in the US has told me that he can no longer be able to provide me with any advice. And also my investment provider has told me I need to close my accounts. What can I do? So in essence, this is someone in Europe who's moved over to Europe, and he's getting that kind of communication from the US. So a good live example, really, to get into a bit more detail from the prior question, I suppose.
Yeah, no, exactly. Was, you know, as we talked about a little while before as well. So we come across this a lot. We get a lot of inquiries that come directly to us. They've had a John Doe letter where they've just said, I need to close my account within a few months and I need to move this to somewhere else. You know, what do I do? So it might be, yeah, you've worked really well with your old previous financial advisor, got on really well with them before, but they're just no longer able to help and service you. I do a lot of joint calls with clients with their existing financial advisors as well throughout the process of a review. So everyone's comfortable, and the old advisor might be as well comfortable that their client's moving on to someone in a good solution as well going forward. But you're going to need to find an advisor that does have the licenses and regulations in both jurisdictions, both where you're going to be resident and also where the solutions might be based as well. So having a US and locally qualified advisor as well is going to be really important there. And then again, as we talk, transfer the investments to another international broker that allows US citizens living abroad, and also exploring the local investment options that you do have and whether any of those would be suitable to utilise alongside that.
There you go. Loads of free advice for the audience that's joined us tonight. There you go. Last one before we move on to Linda, but this is one that I want to ask you as well. How should the client manage their currency risk in their investment portfolio? So obviously a lot of people have got investments in multiple different currencies, multiple different territories. How do you schedule and coordinate that? That's something that we get asked a lot at the moment because of how much the currency market is moving and all the political and economic events. But from your point of view, Randall, how would you talk to a client around that situation with that question?
Yeah, so us as a company, we've partnered very well with yourselves at Lumon as well, and use your services a lot because you're able to help our clients mitigate a lot of currency exposure when they're transferring them over. But one of the first things we do, and in a full financial plan, is understand all of the clients' different assets that they do hold, where they're going to be, what their short, medium and long-term objectives are, what they're currently earning in now, and then aiming towards a future of a figure that they're going to want as a retirement income or for different financial goals that they've got in the future. And then looking at their different assets, how much of a risk have they got to currency exposure and that currency moving against them or for them, could work either way, and what impact would that have on their financial plan? So, that's one of the first things, understanding what that risk would be, and then looking at different potential solutions where if they are in a country where, long term they're thinking in euros, they're going to want to plan to be in euros, got no plans to go back to the US, then how can we mitigate and reduce some of that current currency exposure if most of their assets are actually in US dollar, for example. So we can actually utilize PFIC compliant portfolios. So that's investment portfolios which do follow all of the US compliant investment structure, but actually held in euro or GBP or some other major currencies as well. And that can be, really important to help reduce down some of that volatility that they might have from some of their other assets that they can't, transfer the currency from. So that's a solution that we actually do use quite a lot for clients. And the same, they might have assets in other countries, and they may be in the US, might have assets in other countries and don't want to make that currency conversion over at the same time, and want to hold it in GBP or keep in GBP for a period of time and then look to make changes in the future. So can do that within the investment portfolio, switch that over between currencies as well at any point in time. But also from the beginning, going back to utilising the company as well, such as yourself at Lumon, if there is, and we do see any clients that are withdrawing from retirement accounts, for example, larger amounts, and then understanding how they make those currency conversions over to their home country, and then seeing whether that's efficient or not. And if you're using your local banks or switching from one US bank to another foreign bank, then chances are you're going to get a really poor exchange rate and additional fees on top. So ways that we can help them do that more effectively by using services such as Lumon.
You did my bit for me, thanks. Okay, well, thank you for that spotlight. We're going to come to Linda now with a few questions, and I'd also say thank you for those that have been submitting questions live in the audience. Once we've gone through the FAQs that have been submitted, we will be going through as many of those questions as we can, so please do keep them coming. Linda, over to you on this one. So I'm looking to move from the US to Europe. What are the primary tax filing requirements for US or for American expats?
Thank you. Thank you for this question. It's also always a perfect start about tax returns. So basically, the US is next to Eritrea the only country who has a tax system based on citizenship. So not residence based, but citizenship. So if you look at the tax obligations for US expats, they do need to file their worldwide income wherever they live or wherever they work. So basically, if you move from the US to Europe or to somewhere else in the world, you need to file your tax. It's not the same as paying or owing the IRS any tax, but you need to file the tax. There's a tax treaty. I will tell you about it later. So what's important to know for an expat living in Europe, that your Form 1040, your basic tax return, is going to have an extra form like the Form 2555, that's the foreign earned income exclusion, and the Form 1116, also called the tax credits. Regarding to FATCA, it's very important that you need a Form 8939. It requires all US taxpayers with foreign financial assets to report those holdings to the IRS. But next to the 1040, your Form 1040, your usual tax return, it's very important to know, and a lot of expats do miss that thing, that once you have a foreign financial account, you need to file an FBAR report. An FBAR, it says, is foreign bank account reporting, and it means that all accounts foreign needs to be reported every year. So you need to report the highest balance that year to the IRS. That's very important to know, because once you leave the IRS and you have a financial account outside the US, you are required to file this report next to your Form 1040. That's basically the general information.
Good start. Next question for you, because I'm equally conscious a bit of time. There's loads of questions that are building up that we're going to go through as well.
Perfect.
So, one for you, Linda. So, what is foreign tax credit and foreign earned income exclusion, and what forms are needed to be filed for these?
Okay, I'm going to answer it vice versa. So I'm going to start with a foreign earned income exclusion, also the FEIE called. The foreign earned income exclusion allows qualifying US citizens and resident aliens to exclude a certain amount of their foreign earned income from the US taxation. So basically, if you have an income of less than $120,000, there will be a chance you don't have to owe the IRS anything. So it's a threshold. You can say it's a threshold for the first $120,000. This threshold, it moves every year. So this is the threshold for the tax season 2023. By using the Form 2555 and using the foreign earned income exclusion, basically you tell the IRS, hey, I have an income from that foreign country and I paid already income tax to that foreign country, so I don't have to pay the IRS. It's very simple said. If I look at the foreign tax credits, you can use either the FEIE and the foreign tax credits, and everybody gets, if you live outside the US, you get foreign tax credits, so you can help reduce your owing to the IRS, basically.
Thank you. See, we're trying to make tax and wealth management as sexy as we can. Here we go. Right. What are the most common tax complication issues that lead to an audit for expats? How can US expats avoid these common pitfalls? If you've got a couple of those, again, conscious of time. So yeah, if you've got a few pitfall stories that people can avoid, go for it.
Yeah, absolutely. Well, as I said earlier, a failure to file the FBAR. There are a lot of expats who know how to file a US tax return. They do it themselves for years, but they failure to file FBAR because they simply don't know how or don't know if they have to file the FBAR. So the FBAR again says foreign bank account reporting, and you only need to declare the highest balance on that financial account that year. There is no tax owed on an FBAR. It's only to transfer the amount and to say to the IRS, hey, this was the amount on my account this year. Another thing is underreporting foreign income. So sometimes expats do think that they need to declare their US income to the US and their foreign income to the foreign authorities. But that's not true. Please understand that you need to file your worldwide income in the US and most of the times also in your local country of residence. Then we have another thing, an incorrectly claiming foreign earned income exclusion. So if you use form 102555, please use him correctly, because otherwise there will be an audit of the IRS. And not reporting foreign assets. Under the FATCA ruling, financial institutes are obligated to send every year a report to the IRS with all assets and investments, but also the bank accounts you owe. So if you have not reported it yourselves, there will be an audit from the IRS.
Biggies. Thank you.
Yeah, I'm afraid so.
I'll ask one more, then we'll go into some FAQs because they're starting to, sorry, the live questions because they're starting to build up as well. So keep them coming.
Okay.
This is probably a yes/no one, to be honest. I have no plans to ever return to the US. Can I renounce my citizenship, and how does it work?
Yes, you can. Yes, you can, but it's a decision. It's a one-time, lifetime decision. You can never go back. So this is a very big and personal decision. I'm going to answer it very objective. Yes, you can, technically. You need to be 6 years compliant, 5 years prior to realization, and 1 year of realization. You need to file exit tax. So additional to your form 1040, you need to file an 8854 form where you basically tell the IRS, hey, this is what I owe, or this is the assets do I have, and you need to pay sometimes pay exit tax. So yes, you can. There is one additional fee you have to pay with the US consulate where you make an appointment to renounce. You have to pay $2,350 at the moment. There is a lawsuit in the US where the court rules that the fee should be lower to make it possible for everybody to renounce, but it's not effective yet, and we don't know when it's effective. So for now, the fee of the administration is $2,350. So this is the basic information. If you look at americansoverseas.org, you can see the pros and cons, very objective, of on renouncing the US citizenship. Maybe it can help.
Thank you very much. Right, we'll go into some live questions now, as people have been piling them up and been very patient. So thank you for everyone that submitted them and been waiting. Hopefully you found the information today useful. There was a few FAQs around currency, which I'll comment to in a second as well, and I'll go through them quickly. So first question came in live today from Richard. To either of you, please. So if a UK citizen with green card holder, so a permanent resident, returns to the UK, do they need to file US taxes under FATCA? Who wants that one?
Yes, shall
Yeah,
I?
yeah.
Yes.
Simple answer.
The
Yep,
quick
simple
the
answer.
quick answer is yes. Yes, if you are a green card holder or your green card expired, you are for tax purposes a US citizen still. So you have to file your US tax.
Simple, easy one there. So Richard, if you're still listening in, you definitely need to. Yes, please. Next one's one from Leslie. Oh, go on, Randall. Yep.
On top of that, as well, Linda, is there a way for the green card holders to get rid of their green card and then stop having to pay taxes ongoing? It's similar with the citizenship, but what is there a different process for that, and how would that work?
Yes, there is. You can give back your green card. As of my knowledge, there is no fee for giving the green card back, but you do need to file the 8854, but it's depending on how many years you lived in the US prior to give the green card back. By heart, it's 8 out of 15. So if you didn't live in the US 8 out of 15, you don't have to, there is no exit tax. And if you do, you probably have to, well, you owe the IRS something based on your income and on your assets.
To Leslie, and your question, what is the current and possible future IRS policy towards potential taxation of Q-Rope's funds for US resident expats? That's a question from Leslie earlier today.
Yeah, I can answer that. So yeah, Q-Ops has been a very complicated issue for a lot of US residents, especially over the last 6 to 12 months. So there was supposed to be a double taxation treaty between Malta and the US that allowed people to transfer UK pensions into the Q-Op scheme. And the double taxation treaty was supposed to be working between the US and Malta. But the problem that has occurred is that there was additional types of investment accounts or retirement pensions that were bypassing a lot of US rules in Malta. Now, Q-Ops typically wouldn't fall underneath these because they would be in mostly standard investments underneath this, but the whole Malta treaty has come into effect because of this. Now, there's a lot of talk on how these types of pensions are going to be treated and how. There's a few specialist companies that can actually deal with this and look into it, but it's still ongoing, it's still very live at the moment, so there's no real clear understanding of what can or can't be done. It's something we've had a few people come to us and we're reviewing at the moment and helping them as well speak with the right people to try and find what the solution could be whilst new information and the laws going through at the moment. So yeah, if you're in that circumstance as well, then please feel free to get in touch and we can see if we can help.
It's a topic that I hear a fair amount, and I was on a webinar last week and it was the main topic, really, the most frequently asked questions around that. So yeah, if you're in the audience or listening to this later and exposed to that, it's a live event that's changing. So do make sure to not just assume what you've Googled and was online a few months ago is live now. Make sure that you're talking to the right people to avoid any potential tax mishaps or bills that might come down the line. I'm going to go to some FAQs for the wonder that is currency. I'll try and make that as exciting for the audience as possible, and then go back to some more questions that have been submitted. So thank you for those. A few people are asking, why would I use a currency broker over a local bank? In essence, that's people asking, why are you here, Steve? What have you got to do with it? Why would I deal with you? In the nicest of ways, if we can add value or save money, our industry wouldn't be here. And here is just our firm. We trade about, this year we're on for 11 billion sterling this year alone. So yeah, we're basically saving value or saving money even and adding value, which is one of the other questions that come on in a second. It's around risk mitigation, which we kind of talked on earlier as well, didn't we, right? So when you're moving money around the world, people will, you know, there are other products available, but normally it's an Excel spreadsheet, right? The formula's made, X equals Y at that point, all the planning goes by. the market moves a lot and the next doesn't equal Y. So it's around trying to get the most out of the money when you're planning international moves, especially if you're part of the expat community. What are the costs of using a broker? None. Doesn't cost you anything to open up an account, which is normally the first step, which is basically a KYC check to make sure that you're you and not pretending to be you. And then you can get a free currency consultation by one of the traders and give you all that value that you won't get from the bank. Another good question to ask yourself if you've got any doubt about our industry: when was the last time your bank rang you? And that highlights the difference of service and value. Minimum amounts, there are no minimum amounts. We help people move a couple of $100 to people doing millions. So any volume we can assist with, every value we look after. So it's not like if you've got a couple of thousand, we'll put you onto an online platform like others, you still get a personal point of contact to look after that. So there are no minimum amounts. How do I protect myself against potential movement against me later? Well, kind of goes into my prior point, doesn't it, really? So at the moment, the talk on the town is obviously around the US election and how that might change and what's that going to do. And to those prior points that we kind of mentioned a little bit earlier on at the beginning, currency is a big factor when you're planning these moves, and planning, especially if you're retiring, you know, the money that you've worked your whole life to generate, you want to make that go as far as you can. There's been a spike of applications and people at the moment, in particular from the UK side, because sterling's got to multi-year highs against the euro and the dollar, looking at moving their investments from sterling to dollar and euro nominated investments, basically to take the gain in the movement. And it's moved kind of 4% in 30 days, which is quite a nice big advantage to take advantage of, right? What people do is they use a forward contract, which is like a buy now, pay later option. But again, it's circumstantial, it's down to personal's individual requirements. So as the theme with Linda and Randall and myself, if you're in this situation and this sounds interesting, we should talk. You know, there's no cost or obligation to have that conversation, and then that means we're not going John Smith and using examples. We can use your live environment and give you the information so you can make a more informed and educated decision as to how you're planning the next move. Last one's a good one. How easy is it to get started? Really easy. You just basically fill out a form. Filling out a form so we can do a quick ID check on you and then make sure that you're you and not pretending to be you, and then you can speak to us. But hopefully that's some useful insight for people. Conscious we're down into almost the last 20 minutes. If you've got more questions, let us know and submit them in. There are questions that have been submitted at the time of registration, so we're going to go through a few of those, but we'll try and prioritize live ones that are coming in while we go. So if you're enjoying this, try and find a question that we haven't been asked. You know, test us, give us a go, put a question in there to see if we can help. But the first one I'm going to go through is one for yourself, Randall, which came in from Thomas when he registered and signed up for the webinar. Here it is. Am I better off putting my assets in one country? And if so, what is the tax liability in such a charge? Now, obviously, it kind of depends which country he's moving into. So pick one example for this one, Randall, for me.
Yeah, it could literally be any country in Europe. If we're just talking Europe, for example, just talking France. First off, if you've got retirement accounts, as we discussed, you can't transfer and move those out, and you're not going to withdraw the full balance of those and incur tax consequences to then reinvest that somewhere else again afterwards, because it's not going to, most of the times that's not going to be a good option to incur such a large tax consequence on a retirement account of income tax and then to reinvest that somewhere else. So that's not a great strategy. Secondary, as we talked about with the actual brokerage accounts or individual stock holdings as well, then again, it's what is the alternative solutions in the country that you're going to be in? Do they hold PFIC compliant solutions for you to actually be able to invest that money? Or, you know, should that be transferred to another brokerage account instead, where you can then have multi-currency options instead and move that over? So it would really depend on, again, on someone's circumstances, but most of the time, yeah, it's not going to be either tax efficient solution to move everything out and put it into one country, or the effective options for you might be massively restricted. And fundamentally, there's going to be no real changes to your actual tax liability, because if you're US connected and paying tax no matter what, then yeah, there's not going to be a difference. So it's finding what is the best solution for yourself, rather than always where that actual solution is held.
Makes sense. My camera's just moved for some reason. I'll sort that out. Next question for you, Randall, as well. There's a few questions from people from Germany. So, simplest way to invest in ETFs in Europe for a US citizen residents in Germany?
Yeah, so again, they're largely going to have to be, if ETFs are largely going to have to be US based, and again, having to look at the tax consequences from both sides of the coin there, from the US and from Germany. European ETFs usually classed as a PFIC, so you wouldn't be able to invest into those at all. So yeah, again, finding the brokerage accounts that allows you to invest into it, or the multi-currency solutions, as we discussed as well, where you could have a money manager employ those solutions, and hedge your currency exposure by having that in alternative currencies. It could be what we looked at.
Okay. Conscious we're now on the last 20 minutes, so we're going to try and go through at least 15-20 questions. So we'll try and keep the answers to under a minute, but obviously bear in mind that circumstances will be very different from people who have answered this. So just be conscious of the questions you're submitting, but we'll try and go through as many as we can at this point. And that's the easy one for me first, from Edward. Is there a single bank through which I can access both domestic and foreign currencies? So this is basically, where can I log in, or who can I speak to who can manage multiple currencies that I might have? Some banks offer it, but not normally. You know, when you come across to Europe, everyone kind of goes, HSBC, the global bank. But traditionally, HSBC basically white label regional banks. So you need to log into the French one, or then log into the Swiss one, or the Scandinavian one. So you have to log into lots of different banks. So it's something worth qualifying and asking. The good answer is we can do it. Next one, a few coming from live. I'm going to go to George, who said, I'm a US expat living in Germany with tax residency in both US and Germany. When I will collect Social Security in the US, I have to pay federal tax. How will US Social Security payments be taxed in Germany under the double taxation treaty? Anyone going to give some insight to that in 60 seconds?
That's a very good one.
The good one.
That's a very good one. Yeah, that's a very good one, because it's treated different in every country. So he has to check with his US CPA if it's taxable, and he has to check with his German CPA. And if he needs one or wants an advisory consult, please contact me and I will refer him free of charge to a German tax consultant who can help him. It's no problem at all.
Great. So George, if you're still online or listening this back, reach out to us and we can put that introduction together so that you're dealing with the right people who have got that local expertise. Next one came in from James. For a UK expat in the US planning to return to the UK, how does the UK treaty US IRAs and 401s for inheritance tax purpose? So inheritance tax between the UK and US.
Yeah, trying to keep that under a minute could be difficult, but
okay. Challenges there. Just talk
the UK inheritance tax pensions are typically classed as not falling to the estate for inheritance tax purposes, but US retirement accounts can actually be treated differently, and this actually largely comes down to how the pension scheme's retirement accounts are set up and how it's designated to beneficiaries in the future. With UK pensions, you have something called an expression of wishes, which means essentially it's the trustee's discretion of who the money is paid to, and that's why it falls under the estate. Whereas with 401ks and IRAs, it's usually a binding directive, and the trust, there's no trustees that can actually make a decision. So for that reason, it can actually become liable for inheritance tax. Understand IRAs, 401ks may actually be a large bulk of actually someone's actual net worth as well. So with people moving back or just having any domicility to the UK still, then these things are not usually considered or actually fall in. So yeah, it's a large part of what we'll review, look into, and what that could be. But we also need to look at where the beneficiaries are going to be as well, where the spouse, what their domicility status is as well, whether they have the nil rate band with the UK that they can combine together or not. So yeah, it can become quite complicated. So
Thank you. That was almost a minute, to be honest, so that's good.
Okay.
Yeah, it's very good. Very good.
Next one. My wife is a US citizen and have been living in Holland for 18 years. No income. She has assets in the USA, but not Holland. Do we have to report her assets in the USA to the Dutch tax authorities? Again, she has no assets in Holland. I think we kind of answered that before, being regional, but does anyone want to add more to that, Linda?
So the question is, does she has income in Holland, or does she lives in Holland? If she has income and she lives in Holland, she has to report her income and her asset and their worldwide assets also in the Netherlands, yes. But because of the tax treaty, 95% of the people have assets and income in the US, and the Netherlands don't have to pay actually tax to the IRS or vice versa. So there's a good tax treaty, and in Holland the rates are higher than in the US. So that's beneficial for her.
Thank you. Again, if you're still on and want to, post-event, you'll get all the relevant contact details of all the panelists here. Reach out to us if you want to be introduced to the localized expert. We'll do happily for you so that you can have that information for free and get the right people to have that conversation. Right, some more questions coming in, and how long are we doing for time? 14 minutes. Right, come on, team. Let's see if we can go another 5. Randall, I'm going to come to you for this one. This is one that came in from, let's do the one from Craig. Nice, a simple one, or a short one, shall I say. How are US trusts treated in the UK?
Right. Okay. It's, again, a very complex question. It's a very short question.
Start the time.
A very complex question. Right. So primarily, first off, the US and UK have much different definitions and treatment of taxation of trusts. So what you have a lot of the time in the US, a lot of people have a revocable trust, a living trust, to bypass US probate. To make, when they pass away, simple passing on the assets afterwards. But if you do have UK domicility in any way at all, then this can actually incur UK inheritance tax on the transition of assets into there if you're a UK domicile. So and you can be taxed up to 20% above the nil rate band. So, you know, it's a very big thing to not look to get into one of these or to get involved with that. Now, if you were not UK domiciled and then came to the UK and then become a UK domiciled individual, then those assets may be subject to inheritance tax as well, but also additional reporting. So yeah, again, we would have to look at what the situation is for each one. We do work alongside specialists in this area that could review this and see if any changes can or should be made or anything at all.
That was under a minute as well. You're getting into a pattern here, mate. Careful. Linda, one for you from Jackie. Implications of dual citizenship on post-retirement tax. Bit of an open one, that one again, I'm afraid, but there you go. Randall, set the time. 15 seconds.
I'm going to try my best. So once again, you need to file your worldwide income, right? Wherever you live or plan to retire. This means that you, even if a dual citizen retires abroad, you still have to file your US tax return and report your income. The US has tax treaties with many countries that can help prevent double taxation. The tax treatment of retirement income, including pensions and social security benefits, varies country by country. So, for example, some countries may tax US social security benefits, while others may not. It's very important that you manage these tax obligations before a move to a foreign country, so you know upfront what the tax laws are and if the tax treaty is beneficial for you. Yes, did I make it?
Yeah, I think so. I think that's good.
I hope I also answered the questions from Jackie, but time is good.
Well, we've had quite a few people going, yes, please send us contact details. So I think everyone is comfortable with the fact that they want to speak to us more and they're seeing value in it, which is great. So thank you for the feedback, those that have given us the love back in the questions. Randall, I'm going to come back to you on this one from James. How are US IRAs treated for UK inheritance tax purposes?
Yeah, so I think we covered this one shortly a little while ago as well, but yeah, the IRAs can be falling underneath a UK inheritance tax. It is again down to the UK citizen or pension schemes. They usually have the expression of wishes underneath them, which retirement accounts in the US do not have, and it's more of a directive of a binding rule of who they're paid out to instead. So whilst seen as a pension for income tax purposes, from the estate purposes, a lot of the time it's not, and can actually fall under UK inheritance tax.
Thank you. Sticking with you, please, a question from Mags. What are the pension distribution or investment options for small private and state UK, including tax consequences? Lots of long words there, but again, it's still staying on the UK topic. But
Yeah.
in this book, around pensions.
So first off, the ways to receive your UK state pension, it's not like US Social Security where you have different ages where you could actually receive that from, you know, a variety of different ages. You've got a UK state pension age where you can actually receive that from. And it's a periodic regular payment, so there's no flexibility or anything involved within that. You can defer it and receive a larger state pension if you wish, but generally best to, you know, as it's not something that can generally be passed on or anything at all, then it's generally best to start withdrawing that when you can. Interestingly, you can make voluntary contributions from overseas, and if you're employed overseas, you can pay class 2 rates. And it's about £3.45p a week to continue topping that up. So from an investment point of view, it's a no-brainer. From UK private pensions, it's a lot different and depends on what type of private or workplace pension that you do have. Now, a lot of old workplace private pension schemes will be very restrictive in actually their drawdown options. We come across so many that don't have any drawdown at all. You have to take 100% as a lump sum, and depending on what that value could be, if you're then going to pay tax on the whole amount, then yeah, that's generally not a good option to do. So to look to actually transfer that into an account that has flexi access, one that allows you to do so as a non-UK resident, also really important. But on top of that, you can have first off, the UK tax deducted at source on the pension, and that will be deducted under PAYE. So we help our clients gain something called an NT tax code, which is filling some forms to the HMRC and with the US as well. And then it will just essentially mean that the UK will not deduct tax at source because they know that you're not resident there, and that under the double taxation treaty, you should be taxed in the US. So really simply, review the drawdown options within the plan, what you've currently got at the moment, does it fit your circumstances? If not, should it be transferred? And then look at ways to withdraw from that tax effectively.
Good answer. And to be honest, I think that's going to call us on time. With a couple of minutes to go, I just want to say thank you to both of you for giving up your time today to do this. I've learned stuff, and I've been doing this for a decade and a half, so it's always good to engage with you both and learn more. Hopefully the audience has found it useful as well. Before we go, any leaving comment or note or top tip that you'd pass before we say goodbye to everybody today? I'll go first. I'd say hopefully you can hear the passion between us all and the knowledge that we've got. I'd say just make sure that you enjoy it and engage with the right team around you with these plans and with these events that you've got, to make sure you get the best and the most accurate and up-to-date advice. Don't just lean on Google for your answers. Otherwise, you might find yourself in a problem.
Yeah, and I would say as well, you know, a lot of those questions that come through, they have mixtures of the different services that we all do provide. So we don't provide actual tax advice ourselves, and that's why we partner with companies such as American Overseas that can actually find that specialist CPA to provide that specific advice that's needed for the individuals in those different countries. And then when it comes to the actual transferring of the money and to gain the most value out of converting currencies wherever they may be, Lumon can help, perfect that instance for themselves. And then we ourselves believe that we can manage the investments pretty well and help clients with their objectives and plan towards that for the future for them. So it's never just one always company together, it's the network that people have, and it's the services that all of those combined can give to someone to add their value.
I agree totally. Just adding to you both, thank you, Steve, for this webinar. And this might be a moment to look carefully to the CPA or EA who is holding all your tax returns and check if he's still if you move abroad overseas, if he's still the right CPA for you, because you have to have a good knowledge about the tax treaty. Look at Randall, look at Steve, look at myself, what we know about the tax treaty. It's very important to avoid double taxation. So look carefully to your current CPA and decide if this is still the right one for you if you are moving or planning to move abroad.
Well, again, thank you all. Hope you've enjoyed it. You'll get copies of this if you are watching this back on YouTube channels and things. We'll have our emails and things to reach out to us if we can help with anything. Otherwise, we hope you have as much fun as you can with your wealth planning, tax organising and currency bits. But otherwise, thank you very much and goodbye from me.